Hello, and thank you for joining us for the latest episode of Sustainability Shorts, our short interview series with high-profile business leaders ahead of Climate Week NYC. And I'm joined today by Chris Dodwell, Head of Policy and Advocacy for Impax Asset Management. I'm really excited to have you here, Chris.
Great to be here.
Yeah, let's start and get straight into it. Why should investors be acting on climate change?
Well, fundamentally, it's because of the materiality of the systemic risks that are posed by climate change and the scale of the investment opportunities arising from the transition to a net zero climate resilient economy. So we're sitting here just a couple of weeks after the planet's endured its hottest week on record. And even if global warming's limited to 1.5 degrees, the accumulated financial losses due to heat stress alone, just one of the impacts, are expected to reach something like $2.5 trillion by the end of this decade. This is an absolutely massive issue for investors. And I think what people don't appreciate is the extent to which these physical impacts are going to affect the valuations of stocks. So we did some work last year looking at a couple of sectors, in particular the data centers, looking at how extreme heat are going to affect portfolio assets and potentially leave computer servers at risk of overheating. So you've got a direct impact there on revenue generation. For other things like flood risk, you're actually going to see assets, the valuation of assets, significantly undermined. And we've got a whole set of supply chain risks that can be triggered. So what we're shocked by, I think, is the extent to which companies are unprepared for that. And at the same time, society's response to all these challenges are going to create huge investment opportunities across transportation, energy, healthcare, finance, agriculture. It's estimated it's going to be around $3.5 trillion a year of capital that needs to go in between now and 2050 to build a net zero economy. And that's up from $1 trillion per year at the moment. So 70% of that is going into the energy sector, but there are investment opportunities across the piece. Impax was founded 25 years ago on the firm conviction that actually there would be the potential to identify above average performance if we became experts in this sector. And now, we're one of the largest companies that is specializing in the area. And we believe we're managing to do exactly what institutional investors want, which is to deliver above benchmark performance, looking at the kind of risks and opportunities.
Great. I think it's really interesting to take both that kind of risk and opportunity side together. Are you collaborating with other organisations as part of your work? And if so, how are you going about that?
We obviously can look at the stocks in our portfolios and try to make sure that we've maximised, their performance and we understand the risks that they're exposed to. But we can only hope to reduce systemic risks if we're all acting collectively. So we take the opportunity to invest in those investee companies, but also to do three things principally. Firstly, we're really keen to share the outcomes of the work that we've been doing. So a good example of that is that work I was just talking about relating to data centers and semiconductors, actually, was the other sector. And we did that work with Oxford University, and it was very much with a view to publishing it and trying to push forward how we're working out financial impacts of physical climate risk. But also, we did some work with the S&P 500 a couple of years ago with New York State. And again, that was really trying to drill down into the detail of whether companies were prepared for the risk. And so we published the results of that. It was pretty shocking. We shared them with the SEC. We've spoken to the SEC about some of the issues here. And we think that's a really good way to move things forward, is by sharing work. Secondly, joint research. So Impax is part of the Energy Transitions Commission. We've been members for since about 2019. That is a group that is committed to doing joint research across industry on how one achieves a net zero transition, looking at individual sectors, thinking about the supply chains. So really sharing that understanding. And then lastly, I think we also need to kind of be acting collectively to address some of these risks. So for things that are less well understood, like deforestation, for example, there's a whole set of legislation coming through that potentially leaves companies that have deforestation in their supply chain at risk of having reduced access to market. And I think if we can work with other people who are investing in those sectors, we can help talk to those companies and try to get them to adjust their behaviour and reduce their exposure to that risk.
Great. And as you're talking now, we're talking about systemic risk and starting to talk about regulations and so on. And that sort of, I think, takes us to governments. And how can business deliver those clear messages to governments that they need in order to develop the strong policies?
Well, the first thing I think businesses need to be doing is to clearly communicate to government the role that they have to play in creating the markets for the technologies we need. It's really clear that whilst there's a supply of capital out there, we're only going to get the demand for that capital if we get clear real economy policies coming out of governments, ideally in the form of net zero roadmaps for all sectors of the economy with the policies to support those. So a couple of good examples. The Energy Transitions Commission that I mentioned earlier produced this report on financing the transition. They said the main driver of this would have to be those real economy policies. And at the moment, we're now seeing the UN Food and Agriculture Organization responding to an investor call to develop a net zero roadmap for the food sector, which I think could really encourage governments to put policies in place in that sector. So secondly, we need businesses and investors to work with government to identify barriers to private investment and the most effective policies for overcoming those. So a great example of that is the UK's new Net Zero Council. I'm really pleased to say Impax is part of that. And what we're hoping to do through that is to not just identify where corporate roadmaps can be strengthened, but also how do we overcome these barriers to investment in new grids, in new technologies and other areas. And then the last thing is that businesses need to come forward and take action on their own part and to demonstrate good practice and to help share those tools and methodologies that they've used to do that. So a great example of that is the UK's Climate Financial Risk Forum, which provides a platform for people to demonstrate how they're taking on board climate-related risks, but also how they're measuring their impacts of investing in the transition. And we'll see similar things coming through with the Task Force for Nature-Related Financial Disclosure. We're all going to want to understand how to tackle these issues. And I think industry sharing best practice is a really key part of that.
Great. Chris, listen, it's been really interesting chatting to you today, and thank you so much for joining us.
Thanks very much, Helen.
Make sure to join us at Climate Week NYC, which is running from September the 17th to the 24th. And you can find all the details on climateweeknyc.org and on our social media channels.